Well, the global economic slowdown does not seem to be holding back McDonald's. The fast food company reporting a 7% rise in January same-store sales. But while McDonald's cashes in on the consumer trade-down effect, other restaurant chains are suffering. Let's talk about the sector here and ways to invest or not invest in it. Steve Anderson joins me, restaurant analyst with MKM Partners, along with Lee Munson, Chief Investment Officer at Portfolio Asset Management. Gentlemen, nice to have you on the program. Welcome.
Thank you for having me on.
Thank you.
Lee, let me kick it off with you. What kind of an impact have we seen to the restaurant group as a result of the slowdown?
Well, I think yesterday you saw Reuters come out with 10 casual dining firms that have distressed debt right now. When you look at places like Brinker, which owns the chili chain, or Denny's, you're seeing their debt trade like junk. I think the only thing on the dollar menu for a lot of these stores are going to be the price of the stock. We'd still stick to firms like McDonald's, Yum Brands, and Burger King. We think that the economy is going to take longer than a lot of people expect to recover, so we would still be betting that the recovery is going to take longer in these casual dining firms. A lot of them are simply going to go bankrupt.
And this is one of the early ways people conserve cash. They go out to dinner less. They cut back on things like that. Do you agree with that, Stephen?
Well, I'll tell you what, it's not surprising that there's been a slowdown in traffic all across the board, across most of casual dining. It's a highly discretionary purchase that's dependent on job growth and consumer confidence. And if you don't have those two ingredients, you're not going to see any kind of rapid rebound. So I do agree with that statement.
So how do you want to invest then in this group, knowing that this is going to be one of the places that people cut back in terms of spending?
Well, again, I think it goes back to the how much people are willing to spend. I think the mid-price casual dining and some of the upscale casual dining names, they've been under the gun for the past year or so. I think they will continue to be so. But I think there's some potential opportunities in some of the lower price, lower ticket names. Names like Cracker Barrel, where the average ticket is $8.50 per dinner ticket. And the thing to note with Cracker Barrel is that they're also a beneficiary of lower gasoline prices, and they benefit too from a customer base that, by and large, has retired from the workforce.
Lee, is that how you say it? Where do you want to be investing, or do you want to just keep your powder dry in this environment?
I want to keep my powder dry. I understand the idea about Cracker Barrel. The balance sheet looks good. My big concern with Cracker Barrel is where are they going to get a new influx of people? That brand, it's older brand. It's not appealing to a younger generation of people who might be out of work. I would still place my bet with a market dominator like McDonald's. They're able to come out with new lines like the Angus burger to try to appeal that you can go high, you can go low end at McDonald's. McDonald's also has a proven overseas expansion track record. Yum Brands is trying to do the same, but right now I think the best bet is just to stay away from that industry.
What about a Starbucks? It looks like Starbucks today coming out with a plan similar to a McDonald's or one of these fast food type plans, whereas you're offering a discount and you're producing a meal. Is this did you find that surprising that Starbucks came out with that plan?
No, not at all. I think it's, I've met Howard Schultz. I understand what he's trying to do, but I think the turnaround is going to take too long. I think in the American psyche right now, they see Starbucks as what it's had success with, as being a premium brand. I think the idea of trying to bring that down and bring the value back, I don't think the average consumer psychologically is going to be biting at that.
And when would you both expect that we would see a return to the stability or normality in this group? When do you think people start spending money on this kind of stuff again, going out to eat? What do you think, Stephen?
Well, I think it's all, again, going to depend on job growth and consumer confidence, and we don't see any kind of leading indicator that would lead us to believe that will happen in 2009.
Very, very aligned with employment. That makes a lot of sense. Lee, you agree?
Absolutely, I agree with Stephen. I think that you're going to be looking at 2010. If you had to put a gun to my head and I had to guess, I'd probably say the middle of next year is when you're going to start to see some improvement.
Gentlemen, thank you so much. We'll see you soon. We appreciate it.
Thank you.
Thank you.